In this video, I will be sharing with you a very powerful strategy that works like magic. It is called the FVG or Fair Value Gap Strategy. After this video, if you implement this strategy, your trading career will have a lift because this strategy works almost all the time. Please do not fail to view this video from beginning to the end because every part of this video is important and designed to help you to become a better trader. Now, before we continue, I just want to show you a very lovely website that I discovered not too long, and this website can improve your trading and help you to trade better. The website is called fastbull.com. Fastbull.com is a financial website that provides you with 247 news, market analysis, fundamental news, economic calendar quotes, and many other features. Okay, so and you can use this website in your trading. You can change your language. This is English language right now. You can also change to either Spanish or Arabic or French and whatever language that you want. This website also has a trading chart that is free and can display up to 64 indicators at the same time. You go to products, okay, and click on charts. It will take you to the trading chart, that free trading chart that this website has, and this can display up to 64 indicators at the same time. Support multiple chart layout modes that can allow you to open up to 64 charts at each trading tab, and has several other lovely features. Look at several other lovely features that you can use, and many more that you can use on this. You can, just like any other chart, this website is so lovely and it will help you to trade better and make your trading experience easier. This website as well has very important feature like economic news. You can view economic news. To view economic news on this website, you go to products, and when you go to products, you click on economic calendar. You can be able to access different economic news, like you can see here, news for today, yesterday, today, tomorrow, this week, next week. Economic calendar and events can help you to be able to plan your trading. Look at, you can click on economic events to show you a lot of economic events that are planned for the current day and the upcoming days. All right, so also another important feature of this website is that it gives you access to chat with other traders. You can relate with other traders. It has an important feature called the chat room. All right, this is the chat room here. Okay, here, this is the chat room. So you click on it. We click on chat room. You can enter into a chat room. You can discuss with other traders, share messages. You can type in your own message right here so that other traders can also reply. Okay, so you can relate with several other traders from here. So this is on the chat room. So that is why this website is so lovely and can help you to increase your trading experience. So you can download this their mobile app from here. Look at here, just click here. You can download their mobile app to your phone, whatever kind of phone you are using. You can also download it to your desktop computer or laptop. Okay, just click on this. You can see here, you can download, scan to download. This website is lovely. I'll put a link to this website in the description box of this video so that you can check it out and you start using it to improve your trading experience. Let us continue. What are fair value gaps or FVGs? FVGs refer to inefficiencies or imbalances that occur in the market when there is a sudden or strong movement in one direction, often due to very high buying or selling pressure. How do you identify FVGs? There are some steps you need to take in order to identify FVGs. The first one is to identify a strong price movement, and which is called the momentum candle. Okay, this is the momentum candle. You have to identify this momentum candle. All right, then spot a series of 3 consecutive candles in the direction of the strong move. Now, for a buy scenario, okay, you have candle number 1, candle number 2, and candle number 3. For a sell scenario, candle number 1, candle number 2, and candle number 3. All right, so these are 3 consecutive candles. All right, in between, the second candle is always the momentum candle. This is the momentum candle in the buy scenario. This is the momentum candle for the sell scenario. So there are 3 consecutive candles in the line or direction of the move. Okay, that's how you identify FVGs. And then number 3, you need to ensure that the low of the third candle is above the high of the first candle for the bullish gap. All right, that is to say the low of the third candle, this is 1, 2, 3. So this third candle, the low, this is the low, is higher than the high of this first candle. Okay, this first candle. Now for a sell scenario, 1, 2, 3, you need to ensure that the high here of the third candle is below the low of the first candle. Okay, Okay, then the space between the candle is the fair value gap. So this is the fair value gap here. The space in between the first candle and the third candle in both the bearish scenario and the bullish scenario is referred to as the fair value gap. Now you need to draw a horizontal line to mark the gaps range, and this is the gaps range. You need to draw a horizontal line here and here, here, in between the first and the third candle. You need to mark a horizontal line between the first and the third candle, all right, to show you the imbalance. So this is the imbalance IMB, okay, or FVG. The imbalance is the same as the FVG. Okay, that's how to mark your FVG. Now the final one is say monitor price action for possible retracement. For a bullish scenario, we are looking at price to retrace into this fair value gap for a buy. For a sell scenario, we're looking at price to retrace into this fair value gap for a sell. Okay, so these are steps you need to take to identify fair value gaps. Okay, now how do you use fair value gaps and what do you use it for? The major use of the fair value gap is to identify potential price retracement areas where imbalances may be corrected. All right, so here in this case, you see there's an imbalance here. Okay, this is your candle number 1, 2, and 3. So we're waiting for one price to retrace into this imbalance and sell. Okay, that is what we're looking at. So, and that is how FVG is used. But stay with me, I'm going to show you more things you need to know. Now, for how do you spot FVGs? Now, in a conventional case, you know, for demand and supply trading or smart money concept trading, this is a bullish market. The market is making higher highs and higher lows. And now this is our demand zone. We are looking at taking trades from this demand zone here. One price to retrace to the demand zone, and you take trades from them. But in case of an FVG, price might not really come to the demand zone to buy from. Okay, to buy from like this. Price might not come to the demand zone to buy from. Rather, price would the FVGs always happen around here, always around this point, FVG, around this point, FVG. Okay, FVG. So you need to look for your FVGs around here, and price would come right there to buy from instead of coming to the demand zone. So the FVGs will be around here. Your FVGs around here. Do you get it now? Okay, like this. FVGs should be around here for you to price to buy from instead of buying from the demand zone. So that is the concept. That is what you need to watch out for. So if you are just a supply and demand trader, you might be missing out on several opportunities that price would come to the FVG and buy from instead of going to your demand zone. Okay, now for a bearish scenario as well, the bearish scenario, price is making highs and lower lows. Now these are your supply zone. So but this is where you are supposed to most likely conventionally take trades from supply zones, retracement into supply zones. But in the case of an FVG, this is your FVG right here, your FVG right here. Price would sometimes or most times come to your FVG, sell from. All right, sell from your FVG. This is your supply zone. Okay, your supply zone here. But then price could come to your FVG here, and you know, sell from here and sell from instead of coming here and sell from. So you need to watch out for that. So let us go into the chart to see some examples right now. Let's go into the chart so we can see some examples of how you trade the FVGs. All right, stay with me on this. Now let us see some examples of FVG. Okay, you can see here this is an FVG here that formed, and price came to mitigate this FVG. Okay, but now let us see how it actually played out. Let's see how the FVG played out. Okay, so so now this is the FVG here. So this is a high and that is the low. So when I say high and low, I mean this is the first candle number 1. This is our momentum candle, and this is the third candle. And I told you that the low of the first candle, a bearish scenario, should be higher than the high of the third candle. Okay, so this is our FVG, and we are looking that price should come into this FVG and give us entry confirmation and sell. Okay, so that is what we are looking at. So but then let us see how that would play out. Let us see how that will play out now. So we're on 30 minutes time frame, which is a higher time frame. So we could as well just draw our zone, our FVG zone. Okay, we are looking that price should come to mitigate. So we now have to step down to lower time frame. Let's step down to like you can use 5 minutes or 15 minutes. Okay, let's use 5 minutes time frame. Now we'll play to see how this works. Now price has come to our FVG initially, but that is not, this is the price did not come fully. We want price to come fully into this FVG and give us our entry confirmation to sell. Okay, so let's continue. Okay, if you're an experienced trader, price is just forming some sort of liquidity pool. Price is giving us a liquidity pool, and so some retail traders will mark this thinking is going to be like this continuously. You know, they'll mark this like a channel or trend line, but we that are smart money traders know that it's just a deception. In order to clear, the market is gathering liquidity in order to be swept into this zone, into this FVG zone, because this liquidity forms fuel for the market. So this is a deception. So let us see how the market continued in that line. So this liquidity is going to be swept soon. Okay, the market is sweeping our liquidity soon. Liquidity broken, trend line broken, and now price is coming to our FVG gradually. Yes. Now price is at our FVG, so let us just pause. So I'll explain something. So as price has gotten into our FVG fully, you see that all of this liquidity has been taken out. Okay, the market took out the liquidity, and now we want to look for entry confirmations. Okay, so price has gotten into the FVG, so we'll now look for some sort of entry confirmations. Let's continue. So what we are looking at, so the market has given us some sort of entry confirmations. And what is the entry confirmation? We have the change of character right there. Okay, so we want to draw our entry. Let us draw our entry. So for the entry, we're going to target the low. We're going to target this low. Price would most likely break this low, and then you place your stop loss just few pips above the zone. All right, place your stop loss few pips above the zone, and let us see how the market played out now. So want the market to come back, return to the other block right there, and sell. So let us continue. So the market broke structure, got back into our FVG. Okay, entry confirmation done. So the market is going right down there. Okay, selling. Okay, let's allow the market to play out. You can get multiple entries. Okay, now the market hit our take profit. That is the sell scenario of this strategy. You can see how we got into the trade, how the market would play if it were on a live chart. Let's see if the market would even go beyond it. Market has gone beyond our take profit. Okay, so that is it. So now let us look at buy scenario of this strategy. For the buy scenario of this strategy, let us look at another pair where we are looking at the Euro USD. We use the Euro USD for sell scenario. Let us look at the USD card. Okay, let's see USD card and see if we're going to see a setup. Let's go to a higher time frame to look for a setup. Okay, let's check the 1 hour time frame. Let's use the 1 hour time frame. So here I can see an FVG right there. Okay, now this is an FVG. You can see an FVG, you know, first candle, momentum candle 2, and this is the third candle. So you number from down to up for a bullish scenario. So let us use the bar replay to see, but then we can as well mark the high and the low, the point or FVG point. Let us use the bar replay to know how that entry worked out. Okay, now you can clearly see our candle 1, momentum candle, and candle 3. Okay, you need to understand that the momentum candle is always far bigger than candle, which is number 2. Candle number 2 is always far bigger, like most times ×3 of candle number 1 or candle number 3. Okay, so your momentum candle is always like ×2 or 3 times higher or longer in size than your first and third candle. So now let us go into the lower time frame to see how that played out. Let's go to the lower time frame, like 15 minutes time frame, okay, to see how that would play out. Okay, so we'll mark our zone. Okay, this is our FVG zone here. So that is our FVG. So now we want to let's play and see how the market. Okay, the market is going right up. Okay, yes, the market is going right up, creating liquidity. You can see liquidity created here. The market is going to come to wipe this liquidity soon. Okay, you can see liquidity. The market is creating us some liquidity, or some liquidity pool. Okay, market is creating liquidity pool for us. So it's coming right down with a strong momentum, clearing all liquidities. Okay, coming to our zone or FVG zone. You want to allow the market to go fully into the FVG. Let the market move fully. Okay, let's extend our zone. Now you want the market to go fully into the FVG. It's good. So the market has gotten fully into the FVG. So we want to see like some change of character here. Okay, want to see change of character there in order to be able to know our entry. So the market has broken structure. Okay, so now we have our change of character right there. So we want the market to return to this point and now give us some entry point. So now let us draw our entry, and you always know that your take profit will always be the high. We'll have some leverage, some allowance. We'll give our stop loss some room. So let's see how the market played out. Okay, now we've got into the trade, and then market has started buying. Market takes us in buying, and now going up. Let's see. if the market will get to a take profit, so the market is almost at our take profit, final take profit, and it should break out. It should get to that point soon, anytime soon. The market will get to our final take profit anytime soon, and even possibly surpass it. So the market has hit our final take profit now, smashed. So you see how the strategy works. So the market smashed our take profit right there. So this is the strategy, and this strategy is one strategy that, you know, it will help you, really help you to be a successful trader. When you are concentrating only on demand and supply trading, you might be missing out on some opportunities. That is why I have to bring this trading strategy to you, the FVG strategy. Sometimes you might not see the market might not come to your demand zone or supply zone, or bearish order block or bullish order block, but then you might have to look out for FVGs. The most important thing is to get entry confirmations. If you have your entry confirmations, you are good to go. All right, you have your entry confirmations, you are good to go. You're nothing to be afraid of. Now, if you're yet to join our free Telegram channel, please do not fail to join our free Telegram channel. The link is in the description box of this video. I share free setup analysis to help you to trade at your own discretion. And also, if you want me to mentor you personally one-on-one, do not fail to contact me. My contact detail is in my free Telegram channel, and the link to my free Telegram channel is in the description box of this video. If you're yet to subscribe to this YouTube channel, please do not fail to subscribe. Give this video a thumbs up if you found value from it. Comment down below and let me know what you want me to do and what kind of videos you want me to make for you, all right, in order to improve your trading. So till I come your way next time with another useful content, do have a wonderful day ahead. Bye.